Right now, across this country, millions of retirees are paying bills every single month that they are either fully exempt from or legally entitled to have dramatically reduced. Not because they did something wrong, not because they don't qualify for relief, but because nobody sat them down and explained that these programs exist, that they qualify, and that all they had to do was apply. In some cases, these programs have been available for decades. Some of these exemptions are federal, some are state level. Some are programs that have been sitting there for years with billions of dollars in unclaimed benefits because the people who need them most simply don't know to ask. My name is Mark. Today I am going through 5 specific bills that seniors may be legally exempt from paying. And for each one, I am going to tell you exactly who qualifies and exactly what to do to claim it.
Stay with me through the entire video. Bill number 4, in particular, is one that the overwhelming majority of retirees have never heard of, and it could save you thousands of dollars a year. If you are not subscribed yet, hit that button right now and turn on the bell. Programs like the ones I am covering today change their income thresholds and eligibility rules every single year. When those numbers update, the government does not send retirees a personal letter explaining what changed. This channel tracks those updates and breaks them down in plain language. Subscribe, turn on notifications, and let's get into it. Bill number 1, your property tax bill. If you own your home and you are 65 or older, there is a strong chance you are paying more property tax than you legally have to. Every single state in America offers some form of property tax relief specifically for seniors. But here is the critical problem. According to AARP, only about 8% of the more than 9 million eligible seniors actually apply for property tax relief they are legally entitled to. That means roughly 92% of qualifying seniors are leaving money on the table every single year simply because they never filed the paperwork. These programs come in several forms. Some states offer a direct exemption that reduces the assessed value of your home before taxes are calculated. Others offer an assessment freeze, which locks your taxable value at its current level, so your bill cannot increase even as neighborhood property values rise. Some offer deferrals that let you postpone taxes entirely until the property is sold. The savings range from hundreds to thousands of dollars per year, depending on your state and program. Over 20 years of retirement, that can amount to $24,000 to $96,000 staying in your household instead of going to your county tax office. The eligibility requirements vary by state. Most programs require you to be 65 or older, own and occupy the home as your primary residence, and in many cases fall below a certain income threshold. What to do? Contact your local county assessor's office or visit your state's Department of Revenue website. Search for senior property tax exemption programs in your county. In most cases, there is a one-time application. File it once, and the exemption applies every year going forward. That one requires a one-time application. Bill 2 requires even less, and the money is significantly larger. Bill number 2. Your Medicare Part D prescription drug costs. If your income is below a certain level, you may qualify for a federal program that dramatically reduces or completely eliminates what you pay for prescription drugs every month. The program is called Extra Help, also known as the Low Income Subsidy, or LIS. The Extra Help program is estimated to be worth an average of about $5,700 per year. For many seniors, that number is even higher, depending on the medications they take. With Extra Help, both the Part D deductible and plan premium are waived. In 2026, you pay no more than $12.65 for each brand name drug your plan covers, and $5.10 for generics. Once your total out-of-pocket drug costs reach $2,100 in 2026, you pay nothing at all. In 2026, if you are a single person earning less than $23,940 per year, or a couple earning less than $32,460, with financial resources that don't exceed $18,930 for a single person or $36,100 for a couple, you may be eligible for extra help. Here is what makes this particularly important. Many seniors who qualify for this program are not enrolled in it, because enrollment is not automatic for most people. You have to apply. What to do? Call Social Security at 1-800-772-1213 and ask about applying for the Extra Help program. You can also apply online at ssa.gov. The application is free and takes about 30 minutes. Most seniors assume Medicare premiums are untouchable. Bill 3 proves that assumption is costing them thousands.
Bill number 3. Your Medicare Part B and Part A premiums. Most retirees assume their Medicare premiums are fixed and non-negotiable. For many seniors, they are not. There is a set of state-administered programs called Medicare Savings Programs. These programs help pay for Part A premiums, Part B premiums, deductibles, coinsurance, and copayments for services and items Medicare covers. There are several tiers within Medicare savings programs, each covering different combinations of costs depending on your income level. The most comprehensive tier covers essentially all of your Medicare cost sharing, meaning your Part B premium, your deductibles, your copays, paid on your behalf. Medicare providers are not allowed to bill you for services and items Medicare covers, including deductibles, coinsurance, and copayments, if you are enrolled in a qualifying Medicare savings program.
In 2026, the standard Medicare Part B premium is $204.90 per month. For a retiree on a fixed income, that is over $2,400 per year just for Part B alone. A Medicare savings program can eliminate that cost entirely for qualifying seniors. What to do? Contact your state Medicaid office or call 1-800-MEDICARE at 1-800-633-4227 and ask about Medicare savings programs in your state. Income limits vary by state, and some states have higher thresholds than the federal minimums. So even if you think you may not qualify, it is worth asking. Now, here is Bill 4. This one became law less than a year ago, and most tax preparers are not bringing it up unless you ask.
Bill number 4. A portion of your federal income tax bill. This is the one most retirees have never heard of, and it became law less than a year ago. In July 2025, the One Big Beautiful Bill Act was signed into law. It created a new annual tax deduction of up to $6,000, specifically for taxpayers age 65 and older. This is an addition to your existing standard deduction, not a replacement for it. Seniors, whether working or retired, may qualify. And in married couples where both spouses are 65 or older, both may be eligible for the deduction. That means a qualifying couple could reduce their taxable income by up to $12,000 combined through this provision alone. There is a phase-out for higher income seniors. For single filers, the phase-out begins at $75,000 in income and is fully phased out at $175,000. For married joint filers, the phase-out begins at $150,000 and is fully phased out at $250,000. For a retiree in the 12% federal tax bracket, this new $6,000 deduction would effectively reduce their federal tax bill by $720. For couples where both spouses qualify, the savings double.
The deduction is currently scheduled through the end of 2028, which means the window to take advantage of it is open right now, but it is not permanent. What to do? When you file your 2025 federal tax return, which you are filing in 2026, make sure your tax preparer or tax software is applying this new senior deduction. If you filed already and did not claim it, you may be able to file an amended return. Consult a tax professional for your specific situation. Bill 5 is one almost nobody knows about, because most people assume Medicare Part A is always free. It is not.
Bill number 5, Medicare Part A premium. Most people don't realize that Medicare Part A, the hospital coverage, actually has a premium for some enrollees. And many seniors who are currently paying it don't have to be. Here is how it works. If you or your spouse worked and paid Medicare taxes for 40 quarters, that is 10 years, you receive Medicare Part A completely free. No premium. But if you worked fewer than 40 quarters, you may be paying a monthly premium for Part A. In 2026, that premium can be as high as $505 per month for those with fewer than 30 quarters of work history. What most people paying this premium don't know is that a Medicare savings program, specifically the program called QMB, which stands for Qualified Medicare Beneficiary, can cover that Part A premium entirely for qualifying low-income seniors. The QMB program helps pay for Part A premiums for enrollees who don't have premium-free Part A.
Additionally, seniors who missed their initial enrollment window and are paying a late enrollment penalty on top of their Part A premium should know that certain life circumstances allow you to appeal that penalty. It is not always permanent. What to do? Log into your Medicare account at medicare.gov and confirm whether you are currently paying a Part A premium. If you are, call 1-800-MEDICARE and ask whether you qualify for the QMB Medicare Savings Program to have that premium covered. Let me bring this all together. 5 bills that seniors may be legally exempt from or legally entitled to have dramatically reduced.
Bill 1, Property Tax. Every state has a senior exemption program. Only 8% of eligible seniors apply. Contact your county assessor today. Bill 2, Medicare Part D prescription drug costs. The Extra Help program is worth up to $5,700 per year, and most qualifying seniors are not enrolled. Apply at ssa.gov or call 1-800-772-1213. Bill 3, Medicare Part B and Part A premiums and cost sharing. Medicare savings programs can cover these costs entirely for qualifying low-income seniors. Call 1-800-MEDICARE or contact your state Medicaid office. Bill 4, Federal Income Taxes. The new $6,000 senior deduction created by the One Big Beautiful Bill Act applies to taxpayers 65 and older and is available through 2028. Make sure your tax preparer is applying it. Bill 5, Medicare Part A premium. If you are paying one, you may qualify for the QMB program to have it covered. Call 1-800-MEDICARE to find out. None of these programs require a lawyer. None of them cost money to apply for. Every one of them exists specifically to reduce the financial burden on retirees. And every one of them requires you to take the first step.
That first step starts today. Not next month, not next tax season. Today. If this video opened your eyes to something you didn't know you qualified for, share it with a friend or family member who is retired. These programs exist for a reason. The people who know about them use them. The people who don't will keep paying bills they were never supposed to pay. Subscribe, turn on notifications, and I will see you in the next one.